In this video, I'm going to talk about down payment. Stay with me at the end. I'm going to tell you how to get more down payment with some tricks and hacks that most people don't know. Hi, my name is Serujan Kaneshalingam, mortgage broker for the past 5 years for Planning Prêt, or in English, mortgage planners. And in this video, you're going to learn everything about down payment, all right? You can become an expert to buy your first property, all right? That's my ultimate goal. Stay with me, like I said in the beginning. You're gonna learn about how to get more down payment. There's some tricks that most people don't know. So the first question is, how much do you need? Do you need 5% or 20% if you wanna buy your first property where you're gonna live in it, all right? So the minimum is 5%. Yes, it's only 5% if you wanna live in it. And that's for a condo or a single family home and duplex. I'm gonna talk about this in the second question. Obviously, you need to have the closing fees, because when you buy a property, it's not only the down payment you need. You need to have money for notary, you need to have money for the welcome tax and plenty other stuff. So there's another video I'm talking about what's the fees behind buying a property. For the sake of this video, I'm gonna keep it short. I'm gonna talk about down payment only. So 5% plus 1.5% for the closing fees. If you want to avoid the insurance, like as you know, if you put less than 20% down payment, you need to pay an insurance fee, all right? So there's 3 insurers in Canada, in Quebec. We have CMHC, Serujan, and Canada Guarantee. All those insurers work with the bank to get you an insurance. So you pay the insurance to cover the bank, all right? Because you're only putting 5% or less than 20%. There's a lot of risk that banks takes. So you're paying an extra fee to cover the bank in case that you default on your payments, all right? I'm gonna put on the video how much you will pay if you put 5% down payment, how much insurance fee you'll pay if you put 10%, 15%, and up to 20%, how much you will pay. The insurance fee is not something that you pay right away. It's gonna be included in the mortgage. So if you're buying something at $300,000, 5% is $15,000. So your new mortgage will be $285,000. On $285,000, if you put 5% down payment, you will have an insurance fee of 4% that will be added. So you're not paying it up front, you're gonna be added in your mortgage for the next 25 years. So it's around $11,400 that will be added. So your new mortgage is gonna be $296,400. So on that $11,400 of insurance that will be added, you're only paying taxes on that, okay? There's a 9% tax that you have to pay at the notary. It's gonna be $1,026 around there for $11,400 of insurance fee. Obviously, if you buy something higher, well, do the math, it's 4% if you're putting 5% down payment, all right? If you wanna avoid the insurance fee, you can put 20% down payment and you have no insurance fee to pay, all right? It's very basic. If you buy something at $400,000, 20% down payment is 80 grand, 400 minus 80, you will have a mortgage of 320. And that's pretty much it. You're not paying any taxes, any insurance fee if you put 20% down payment. Now the question is, if you have the 20%, is it better to put 5% or 20%? That's personally, it's a personal question. What can you do with that 15% if you're not putting in your property? It's another subject. For the sake of this video, I'm gonna keep it short. I'm gonna only talk about down payment here. Now, if you're wondering, you're buying your first property, you don't want to buy a single family home, you don't want to buy a condo, or maybe you want to buy a condo, duplex, triplex, fourplex, fiveplex, you know, that's your first property, but you want to go right away to investment property. What's the minimum down payment you need? Let me answer this question, all right? For a single family home, it's only 5%, all right? Up to a duplex, it's only 5% that you need. If obviously you're gonna live in one of the properties, all right, one of the apartments, all right? So single family home, remember, it's 5%. Condo is a 5%. Duplex, so also 5% if you are going to live in it. Triplex, now we're going to 10%. Fourplex is also 10%. And fiveplex is 15%, all right? So 15% if you are going to live in one of the properties. Let's say you're not gonna live in the property, well, it's 20% for all the type of properties that I just mentioned, all right? 20%. My personal opinion, guys, if you're buying a duplex, triplex, whatever the case, investment property, and you have the down payment, you have minimum 5%, and you're waiting to save the money up to 20%, so you will have a lesser mortgage. The question you need to ask is it a good moment to buy, and how's the market is doing right now? Okay, so right now the market is very hard. The values of the properties are gaining so much value. If you buy something at $300,000 next year, is worth minimum 315, 320. That's how crazy it is right now if you buy a property. So instead of waiting until you have the 20%, my opinion is that you buy right away, because you're losing so much money in the appreciation that you will gain if you bought the property right away. Let's say it takes you 5 years to have 20% down payment. You will lose 5 years of appreciation you could have gained if you bought that property. Your same property you're buying at $300,000, 5 years later it could worth easily 350, 360, 370 based on your market. All right, so friends, if you have the down payment, you have the closing fees, you know how to get a mortgage, you know what it takes to become a first-time buyers. Because of my free education I'm giving you, don't wait around, get to action right away. All right, the next question is, who can gift your down payment? If you are a lucky one and you can have friends, family member who can lend you the money or just gift to you the money, how does it work? All right, what are the eligibilities at the bank? What banks accept and do not accept? So to make it simple, it has to be a direct family member. It's very important. Okay, so what do I mean by a direct family member? It could be your dad, your mother, your sister, your brother. Okay, it can be your cousin, it can be your second cousin, third cousin, fifth cousin, your friends neither. Okay, it has to be your direct family. So why does the bank want the money to be gifted by only family members? Okay, why? Because if you take the money from your friend, maybe you have to give them back the money down the line. So you're taking a loan from your friends, all right? And the bank knows that you're maybe paying an extra payment to give that money back for the next 5 years, all right? So the bank doesn't want that. That's why it has to be a family member, even though you can also have a loan with your family member, all right? The bank doesn't care. It has to be your family member, okay? So it could be your dad, mother, sister, brother. It can be your second cousin, or your family friend. It can be all those people, all right? But since I'm a mortgage broker who work with different institutions, different lenders, different banks, there are ways to get around this, all right? Around this restriction. So just call me and we'll figure out how to do this, all right? So next question, guys, how long do you need the money to be in your bank account if you're using that money as down payment? The most common error that I see, they don't have the money up to 3 months, all right? They get their money like yesterday and they want to buy the property tomorrow, and unfortunately it doesn't work like that. It doesn't work, all right? You have to have your money for at least 3 months, 90 days in your bank account. Why does the bank want it that way? Is because they want to avoid any fraud, any money laundering, and you know, it's a very specific question, and for the sake of this video I'm going to keep it short. You need to have it for 90 days, all right? If you don't have it for 90 days, there are some ways to get around it, okay? But you have to call me for that. I'm not going to explain to you in this video, all right? So you need to have the down payment for 90 days. Short and sweet, 90 days, okay? Let's say you have it for 90 days, okay? And you're ready to call me, you're ready to buy your first property, you're excited, you call me, and I just realized that in your bank statement, on that 40 grand that you had, you took 5 grand just to, just to pass to a friend, and he give you back the money the next week after, you put it back, and you think that everything is good, but it's not good, all right? Why it's not good? It's because for that $5,000, the countdown starts over again. So that $5,000 has to be in your bank statement for 90 days. So because you wanted to help your friend, you're not helping yourself. All right, you need to have your money for 90 days. If you move your money, you have to have proof, all right? If you move from your account to another account that is still yours, that is okay, but you need to have proof. And ideally, please don't move it. You keep it in one place. It's easier to show at the bank. It's easier for the banks. They won't ask any question. That will be the easiest way. But if you have to, let's say your money is in your investment account and you want to transfer to your savings account, obviously you have to, all right? So that's okay, as long as we have proof. Otherwise, guys, keep your money in your bank account for 90 days. If you have an emergency, just know that the countdown for 90 days starts over as soon as you take out the money. And finally, guys, how to get more down payment. I know you were dying to know how to get more down payment. If you're saving right now and you just want to fasten the process, there's some ways where you can get more down payment, all right? I'm gonna explain to you. Most people don't know that, okay? But since you're educating yourself and you're working with the best mortgage broker, let me explain to you how it works. There's different ways to get more down payment. You can obviously get down payment from your parents, from a family member. You can also borrow your money from friends, all right? You can borrow it from, let's say, a line of credit. That is not a good thing to do. But if you have no choice, or if your rate is very, very low, you could do that. I'm not talking about any type of borrowing. I'm talking about a really legit stuff that you could do to have more money. What is it? With RRSP, all right? RRSPs can give you more down payment. In normal circumstances, if you have money in your RRSP and you want to take that money out, you're getting taxed on that money that you're taking out. But what is really cool about RRSP is when you're buying your first property, you don't have to pay any taxes if you're using that money for your down payment. But Serujan, I don't have any money in my RRSPs. So what's the point of explaining me all this? Hold on a minute, I'll explain to you why, all right? If you don't have the money, okay, there is a way to borrow that money for a certain period of time. And because you're borrowing that money, you're getting a tax return, okay? That's where you're getting more money for your down payment, all right? Stick with me. Obviously, it's gonna be a short video, okay? I'm not gonna go into details. I'm gonna keep it short. But if you have more questions, just call me, I'll explain to you, all right? So if you don't have any money in your RSP, there's a way where you could borrow that money and you keep that money for 90 days. You reimburse them, okay? You're not taking that money to pay your down payment, all right? That's not the plan here, all right? You reimburse it, but to the eye of the government, you just invest it in your RRSPs from your income. Let's say you made $40,000, you invested $10,000 RRSP. So basically you took $10,000 of your income and invested in a program and you get deducted for that. So that's how you get your money for your down payment, by having money from the government as tax returns, okay? Based on your tax bracket, based on how much you invest in the RRSP, you will get a tax return. All right, maybe you have more questions. I know it's not a simple strategy, okay? But just call me, I'll take the time to explain to you and make it fit for your situation, all right? Most people don't know this, guys. You're learning this, maybe this for your first time and you didn't know this before, okay? You'll be surprised how much money you can get in tax return and use it for your down payment, all right? So call me and I'll take the time to explain to you. So in the next video, I'm talking about credit score and debt ratios that is as important as the down payment, okay? I'm only talking about important stuff that you should know before getting your mortgage, before you buying your first property. So stay tuned for that, all right? Follow my YouTube channel. And lastly, guys, I'm organizing a webinar where I'm talking about how to build wealth with real estate, where I'm talking about how to pay your mortgage faster, how you could pass down to your kids all the wealth that you're creating, how you could take your retirement sooner with real estate. If you're interested, register with the link below for the next date, all right? It's super interesting. And most people after the webinar, they're ready. They always ask the question, why it took so long to invest? I'm ready right now to invest. That's how powerful this webinar is. So don't wait around, click the link below and register right away.